What's going on, guys? Welcome back to another video. In this video, I've got another AMC update to bring all of you this afternoon. So we are not seeing a great day on the charts at all. We are down about 8.28% at the current time that I am recording. And this is not at all what we would like to see. But there are a lot of things that we need to discuss in this update video to really give us some good understanding of what exactly is going on with AMC, what is causing this move right now, and what we could expect to see going forward according to what's happened previously with the AMC price action when we've seen these types of news. But again, guys, when we take a look at all of the data, when we take a look at how far we have come, the apes are not leaving. They think they can shake us down with potentially an 8% move, a $3 move to the downside, but the apes are not leaving. So if you guys are still very excited about what we have going forward, make sure you drop down below in the comments, and apes are not leaving. So we also have to go over that Ortex data, exactly what the Fed was saying today that really drove the market to the downside. If you guys were on the stream this morning, we did go over a couple of these things, but there are some other key details that I really want to make sure everybody understands. We've been talking about the expectation for volatility to pick up, and I want everybody to be fully prepared of what we have going forward. And today we are also seeing somewhat of a reverse gamma squeeze, so we're going to go over exactly what that is and how it is affecting our price action. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So again, at the current time that I'm recording, AMC at $33.78. Not a strong way to start off the week. Now, when we come over to the Ortex data over here, let me just give a quick refresh so we can get some up-to-date data. We have utilization 74.15%. The short interest change today, it's actually up about 2.74% according to the Ortex estimates. 1.13 million shares has been returned. 3.74 million has been borrowed, and the borrowed change, a net borrow against AMC of about 2.35 million shares. And the estimated short interest right now is sitting at about 16.27%. But if you guys remember from yesterday's video, we kind of went over exactly why these institutions are going to struggle to hide this short interest coming up over the next couple of months, especially after January hits. So if you guys are interested in that, make sure you go watch yesterday's video. But we are also seeing this days to cover metric continually on the uptrend. It is still at 1.69, meaning that with the current average volume that AMC is seeing and the current short interest, it would take these short institutions, just according to the reported and estimated data, about 1.7 days to cover their entire short position, meaning that even at these price levels, if the shorts decided to start covering a portion or all of their position, we would see some very significant price movement to the upside. And when we think about what's happened in the past with AMC, with these significant downtrends, let's take a look at some of the charting right here. When we come up to the 6-month chart, we see that almost every time AMC has a very significant sell-off, it bounces right back up. Significant sell-off, bounces up, significant sell-off, bounce back up. Now, I think we could easily be in that wave right here. We could easily be seeing the start of the Santa rally, but as we're going to go over in a couple of minutes, the market is most likely going to be a little bit volatile going into the end of the year. Now, coming over to this article, the Dow dropped 600 points after Powell mentioned speeding up the taper even amid the Omicron threat. So some of the statements made by Jerome Powell today, at this point, the economy is very strong and inflationary pressures are higher, and it is therefore appropriate, in my view, to consider wrapping up the taper of our asset purchases perhaps a few months sooner, meaning that they are going to speed up the process of buying less assets. So they are basically going to take away a little bit of the demand for the assets that the Fed was buying, potentially causing a little bit of a downturn in the overall market. Now, they also made a couple of statements on inflation. Powell basically came out and said that he didn't really like the term transitory, and this just kind of goes to show us that the Fed really does not have a good grasp on what's been going on in the overall market. Remember, Inflation started off as being not a problem, then it was transitory, then it was here to stay, higher than expected, inflation is good for you. They really have no idea what they're talking about right now. So when Powell comes out and makes these types of statements that spark some uncertainty and really issues some of these hawkish statements, the overall market is going to move to the downside. And that's mainly what we saw today. When we pull up the S&P 500 ETF, the SPY, and we put this on a daily chart, we can see that the overall market has been bleeding out today. It's currently down at the time that I'm recording 1.62%, $7.50. That is a very significant move to the downside. So when we look at a lot of stocks in the overall market, pretty much everything is having a very significant red day. But that does not necessarily mean that there isn't a lot of shorting on AMC, but the overall market is what is driving the price action today. Now, coming back over here, when we take a look at these max pain prices, the max pain on AMC for this week is 38. Now, typically in the past weeks, we've seen AMC's price trade above that max pain heading into that Thursday and Friday, the end of the week. So the pinning that the market makers would do would actually adversely affect a lot of our positions if they need to push the price down and have a lot of those calls expire out of the money. But what we're seeing this week is almost the exact opposite. Right now, with AMC trading in this range over here, they would actually need the price to be a little bit higher. And what these institutions, these market makers need to do right now is actually somewhat of a reverse gamma squeeze. And we're going to take a look at that right here. So when we look at this week's expiration, we can see that there is a significant amount more puts that are in the money right now than calls. Same thing with next week. And then we come up to the monthly options expiration date for December. Now, what this means is that if these puts are in the money in a greater fashion, so there's more open interest on the in the money puts than the in the money calls, then the hedging would gear towards the downside. Now, when you are going to hedge these options that you are selling, specifically puts, what you can do is you can either buy an offsetting put contract, or what these market makers and institutions are most likely going to do is go out in the open market and short shares, because since when you sell puts, it essentially creates a positive delta position. You need to offset that directional risk, which is why they would go out in short. So when we see AMC start to move to the downside on any given day, and we see the puts and the calls switch from the calls being outweighed in the money versus the puts, we're going to see a lot of shorting just due to the hedging that these market makers and institutions need to do. Now, in addition to this, with the calls running from in the money to out of the money, if these market makers were hedging these calls, then they no longer need to have that hedge on. So it creates this double-edged sword where we're seeing these calls being unhedged, which is essentially going to have selling of shares on the open market. And then the puts also need to be hedged for. So they're going to create more selling volume with selling the shares that they needed to hedge for the calls. And then they are going to hedge the puts and go out and short those shares on the open market. So it's a double sell right there. But when we think about this situation with the calls running out of the money and the puts running in the money, if we see a bounce on AMC tomorrow or throughout the rest of this week, we could see the exact same thing happen to the other side. We could see the puts run out of the money and those institutions would cover those short-term shorts. Now, again, these are not the shorts that are really driving the price action, those potential manipulative shorts that are driving the price action down, but we would see the covering of those short-term hedges on these shorts, and we would also see the delta hedging come back on the calls if we were to see a bounce in the overall market tomorrow. So with all of this being said, we are most likely going to see a lot of volatility going into the end of the week just due to everything that we have going on in the overall market. And again, we haven't even gotten to the debt ceiling fear mongering that I am expecting to see from all of these news media outlets coming up in the near future. But again, I don't think everybody is really taking a look closely at what we have going on here. I know that this is not a price movement that we want to see at all. But again, these types of things are going to take a lot of patience, and I know that statement is going to make some of you a little bit upset or angry or frustrated with what we're seeing. But when we think about what's really going on with AMC, Adam Aron is really doing everything that he can to set us up next year for some really awesome things on the horizon. We've talked about how Adam Aron is playing 3D chess in the past, basically setting up a precedent for all of these NFTs that he wants to issue. So in the event that in the future that Adam Aron wants to issue a dividend, either if it's going to be a security token or an NFT crypto or an NFT dividend or whatever he wants to do, the legal implications of that aren't really going to fall as harshly on AMC as it did with Overstock. So this situation is going to take some time. And again, we are still looking forward to that January expiration date where we still have, even with the amount of drop that we've seen today on AMC, 120,000 call contracts already in the money. So we have a lot of really good things to look forward to, even with this significant price movement to the downside. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a decent day, and I'll see you guys in the next video.